Hey guys, it is Julie here with Tip Ranks. In today's video, we're taking a look at two strong buy stocks with ratings from some of RBC's top analysts. So in today's video, we're going to take a closer look at each of these companies and what's going on with them lately, as well as what the analysts are predicting for their stock's future. Right before we get into that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to check out the Tip Ranks Twitter page to stay up to date with all of the latest market news. All right, now getting into these two stocks. The first one on our list today is a very well-known company, and that is Visa. Trading under the ticker V, they're currently priced at about $220 per share. Visa also pays a dividend with a current yield of 0.58%. On the Tip Ranks Top Smart Score, they come in as a 10 out of 10 for an outperform rating. This comes with positive technicals and increased hedge fund activity. Visa, of course, is a payment processing company, and they're involved in payment processing every step of the way, from the merchant that accepts Visa, the financial institution that provides Visa cards or enables merchants to be paid, and to the cardholder that is actually using Visa cards for their payment products. Now, back in March, Visa actually got some not so great news when it was announced that the U.S. Department of Justice had launched an antitrust investigation into Visa's practices regarding debit card transactions. The DOJ is looking into the network's rules for routing transactions both in stores and online. So obviously never fun to be under investigation, and we'll follow up with how analysts reacted to this news later. But this was luckily followed by a few strings of really great news for Visa, including the fact that Visa has launched a pilot program to allow transactions to be settled via cryptocurrencies on its payment network. Transactions on the network will be settled via the stablecoin cryptocurrency USD coin, whose value is directly pegged to the US dollar. The payments giant has partnered with cryptocurrency exchange Crypto.com, who called the transaction a huge milestone for the industry as crypto and fiat networks begin to converge. They also reached a partnership with JD Global Sales. JD.com and Visa have signed an agreement to deepen cooperation in cross-border e-commerce. Under the partnership, they've agreed to jointly launch an online merchant subsidies program targeting consumers across Hong Kong, Macau, Taiwan, and overseas markets. The program aims at facilitating the overseas expansion of Chinese brands and merchants, helping them recover from the pandemic at a faster pace. And Visa also announced a significant increase in their contactless commerce, as they hit 1 billion additional touch-free transactions, 400 million of which took place in the UK. Consumers and merchants are increasingly turning to contactless payments as a secure and seamless way to shop. All of this news has investors looking forward to Visa's second quarter fiscal results, which will be coming out on Tuesday, April 27th. The results, along with accompanying financial information, will be released after market close. One analyst covering the Visa stock for RBC is Daniel Perlin, who not only is rated 5 stars, but comes in as number 8 out of over 7,400 Tip Ranks analysts. He says that Visa's current quarter and forward commentary firmly reestablishes the durability in the model long term, as cross-border, debit, and e-commerce volumes all point to better days ahead. The quarter's cross-border results were better than it had previously forecasted and drove what it considered an overall stronger than expected first quarter. The analyst summed up that as the path to normalization becomes clearer, likely in the second half of 2021, we believe many of the positive structural changes that are now benefiting Visa will persist, while cyclical drags will modestly abate. One analyst making comments regarding the DOJ investigation is Tianxing Huang from JP Morgan, who said that regulators have regularly investigated this subject for some time. While acknowledging that the market is especially sensitive to antitrust investigations in this environment, which creates an overhang, Huang said that Visa has successfully navigated heavy regulatory oversight in the past. Visa currently has 18 analyst ratings on the stock, and as I mentioned at the beginning, it does come in as a strong buy. The average price target is $247 per share for about a 12% potential upside. Looking at our detailed list of analyst forecasts, we have several ranging between 11 to 16% growth potential. Daniel Perlin from RBC is especially bullish with a $297 price target, which would be a 34% growth. The second company on our list today is Synopsys. They trade under the ticker SNPS and are currently at $256 per share. They come in as a 9 out of 10 on the TipRanks Smart Score for an outperform rating based on very bullish news sentiment and positive technicals. Now, Synopsys is in the semiconductor sector. However, it isn't exactly a semiconductor manufacturer. They are one of the world's largest software companies and specialize in electronic design automation, or EDA. They provide the tools for engineers to test and design cutting-edge semiconductors. Synopsys is at the forefront of smart everything, with the world's most advanced technologies for chip design and verification, IP integration, and software security and quality testing. They help their customers innovate from silicon to software so they can deliver smart everything. Their design technologies maximize productivity and ensure the best quality of results while optimizing chips for power, performance, and cost. Their verification technologies cut months off project schedules by enabling the verification of complex chips together with software faster. They help their customers find system-level bugs earlier and faster, bring up software sooner, and validate their entire system. Synopsys has a blue-chip, diversified customer base. Semi research and development is a top investment priority for semi and system customers in all phases of the business cycle. Their customer base consists of virtually all semiconductor companies in the world, including all of the top 20. Under the systems, 40% of their revenue comes from systems companies. Systems companies develop chips as an input to an end product, rather than selling the chip itself. 65% of their revenue comes from electronic design and automation, where they have over 35 years of investment and execution. 25% comes from their semiconductor IP, and 10% from software integrity. Their primary long-term objective is to drive double-digit non-GAAP earnings per share growth on a multi-year basis. They also want to drive non-GAAP operating margin into the high 20s by 2021 and greater than 30% longer term. Covering the stock for RBC is analyst Mitch Steves, who is also a 5-star rated analyst and comes in as 15 out of 7,400. He notes that Synopsys has a record of stable operations, a well-managed order pipeline, and predictable earnings. We expect it to benefit from an improving pricing environment in the sector and strong growth in IP offerings. We expect earnings growth above normalized EPS growth for semiconductor companies with almost no volatility. He added that we see no change to the fundamental thesis and continue to believe that EDA is one of the best, if not the best, ways to invest in semiconductor growth long-term without material business volatility. Net-net, we remain positive on shares of SNPS. Altogether, Synopsys has 10 current analyst ratings, coming in as a strong buy with a price target of $318 per share for a nearly 25% growth potential. Most of those ratings all coming in 2 months ago after their last earnings report, ranging between 21 to 28% upside. The most bullish comes from D.A. Davidson with a price target of $335, which would be over a 30% upside potential. So there we have 2 strong buy companies with some great growth potential ahead. So let me know your thoughts in the comments on these 2, whether you hold them already or are interested in getting in, and what other growth companies have been catching your eyes lately. I always love hearing from you guys, so make sure to leave it down in the comments. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Any investment decision needs to be made based on your own research and due diligence. Don't forget to make sure that you're subscribed to the channel and to check back for our pre-market morning update, where every morning I'm getting you up to speed before the opening bell. Thank you guys so much for watching, and we will see you back here next time.